What's going on, everyone? Happy Friday. I think that's the vibe everywhere, Steve. It is a beautiful day. It is a beautiful day. Happy to be here with all of you. I got a special session ahead. I'm really looking forward to it. We also got the subtitles down below for the session segments. We're going to be starting with stocks. I'm going to be starting with stocks because yesterday we were talking about, would it be possible to have any type of solution for NVIDIA? Now, we said, well, we're executing off of FNGU on the buy side. Now, the inverse of that is FNGD, and the returns are spectacular. I mean, they are really crypto-esque returns. If you include a bull market, they outperform Bitcoin. I mean, obviously, they don't outperform Ethereum or Cardano, but I mean, crypto-esque returns. We have other solutions in the stock market as well. We have Tesla, as well as TQQQ and SQQQ, which is the inverse. And that was something that was really exciting. Just as 2023 began, that January, right after the new year started, that was something that was introduced to CTM. And I think that was a massive expansion upwards, offering the ability not to only execute inside the cryptocurrency markets, but also inside the stock market, inside the public markets. And the timing couldn't have been a lot better for a lot of people involved in CTM, as much as that a lot of trust was being lost with crypto brokers, and people were just looking for solutions that they felt more comfortable with. Now, you could only do so much at a certain time, right? And that's kind of like, especially, I don't know if I have the right word or terminology for it, but you go through like really creative phases where the amount of work is intense, and then you kind of plateau off. Now, I firmly believe, and we believe and embrace at CTM, that the foundational strategy we have, the strategies we have in place are foundational, meaning they are more than enough, what I like to refer to as getting it done. Now, the returns that we put up there as far as getting it done and what that long-term plan is, they are quite lofty compared to, well, just about everyone else. We've looked at what Warren Buffett's compounded annual growth has been. We've looked at Renaissance Technologies, what their returns after fees have been. And it's kind of what, I mean, that is what our goal is. Now, you know, I like to say, and I say after taxes, But with Renaissance, I guess it's after fees. Aldo, great to see you over here. Everyone, great to see you on this Friday. A lot of people have to be wondering right now as we are seeing, you can see this NASDAQ chart over here, and you can see the ascending wedge and prices breaking out above the resistance over here, and it is taking off. People might be wondering, what are the market's reaction going to be to any debt ceiling deal? It looks like the market right now is giving that reaction. We're looking at the market's able to extend the gains off of NVIDIA's blowout earnings. We're seeing the NASDAQ up 2.4%, the S&P 500 up 1.2%, and that's also on the back of a stronger dollar and yields rising. Yields rising. We'll get into the macro a little bit later into this session, but it looks, and look how beautiful that is. I mean, I'm looking here at the chart showing the closing basis, right? You can see these lines over here is the closing basis, and you might look at that and you could say, well, all right, I could see that trend line would be over there, but look how it's so important to be using the candles and the wicks of the candles. And look how price came into that resistance up over here before breaking out. It is a beautiful, though, breakout, retest into the horizontal level, and then thus far resuming out, breaking out. Now, I don't want to be that guy, but I'm going to be that guy, right? I mean, look, often this type of behavior on the equity markets, we've been looking at this since 2020 together. When you have an upward sloping channel and then price breaks out to the upside, now why it could have a significant loft move to it, that usually does mean not a reversal, not a long-term trend change, but it does usually lead to some type of cooling down. So my expectations are going to be, right now the market is pricing in the debt deal being a success. Now it's not yet, and the markets are closed on Monday for Memorial Day. And if for any reason there's any uncertainty, well, then things could get a little bit, things could get a little bit dicey and rocky. I wouldn't be surprised at all. But right now, the market is very confident that it looks like the two sides are coming to a deal. And I think that this is the market's reaction to it. Now, we could see some follow through. And if I jump back over here to this chart, and you could see this trend line that we have over here highlighted, and that offers the market symmetry. Actually, when we get into the market review, I'm going to build off of potentially where upside resistance is now that we've broken above here. This is bar chart showing the stocks with the most active options trading. And we have at the very top in the video. This is important because one of the main goals, there's many goals, but one of the main goals is to be able to go ahead and have CTM 2.0 mechanical solutions to everything on this list, right? And we have the TQQQ and SQQQ. We have Tesla and TSLL, which is a 1.5 leveraged off of Tesla, FNGU, FNGD, and that's it, right? And this is the list of everything that I would like to see if it's possible. Now, it may or may not be possible to do. For example, I have looked at the semiconductor 3 times leverage ETF, and it's not really a viable solution for us. I mean, in the last 3 years, the return is roughly 500% with like a 30% drawdown. That's not something that we find desirable. And I don't know whether or not for the rest of these that are on the bucket list, it will be possible to come up with elegant solutions or not. But I would like to find out, because a lot of people are able to go ahead and trade the underlying stock. And there are other people trading options off of these strategies as well. Now, this is a good list as well, because why I have this list of the most heavily traded, I won't say the most heavily traded, of heavily traded stocks. And we look for instruments that are heavily traded so that whether we're looking at this together, it does not affect whatsoever any type of slippage. And we could kind of participate in what we want and choose to do. So NVIDIA yesterday came up. Is it possible to have a solution? And my response was, well, we have a solution for FNGU. Is it really needed? And being that this is 3 times leverage, would it even compare? By the way, FNGU is just absolutely a monster. In 2023 here, we're working on 129%, but now holding another open position here, 16%. I mean, look, it's the weekend. These things gap up and down, and it could go either way. A stop loss will not be respected when the market's closed. This also trades regular trading hours, meaning even during extended trading hours, this is not going to go ahead and give any type of signal. Stops will not be respected if the market's closed until they open. And they gap both ways. That could be during the week and, of course, on weekends and a 3-day weekend ahead. Nevertheless, this is starting and continuing just to look absolutely stellar. And this really, building off of yesterday's session, makes the case for that further diversification, right? When I want to talk about diversification, I'm talking about whether someone chooses to be trading Bitcoin and Ethereum, Cardano, and adding into this type of diversification to help smooth out the overall equity curve. And then we have FNGU, and I took a look at it, and it's pretty good. This is from 2000, and the draw. This is without stop losses, by the way. When I develop a solution, I look for the strategy itself to be able to get in and out of the market, and then add the stop losses for some type of like safety, right? And you can see over here, this is coming back. It's a little over 3 years, and almost 6 months now. We're moving into June, so 3.5 years and a 700% return with an 18% drawdown. Now this is not leveraged, whereas FNGU, obviously the returns are significantly greater, but that's also looking at leveraged, right? And if you go back, and you could see 2,900% return. And if this winds up being a trade that takes profit again, that's going to continue to compound even further. But this is a really good solution. And again, this is a solution that this is both sides, right? Because it's trading the underlying here, NVIDIA. It's not trading a leveraged ETF. On the leverage ETFs, the opposite side, we use the inverse. All right. And couple of things of note. I mean, if this were to be 3 times leverage, I think it would be pretty much on par. And I think one of them, for me, well, hold on, let me give perspective. I think of someone's strategy, whatever it were, and they were able to produce this type of return with that type of drawdown. I think that it's more than getting it done. I do believe that. Now, I don't think that it's necessarily our best. Well, it's not, but it's a good solution. It's a very good solution, and it opens up the door for those that specifically are looking to trade in the options markets to have the strategy to trade off of. So I'm very, very, very excited about that. Michelle, there's people discussing it inside the Discord and developing the conversation there, specifically off of those who are executing, is going to be very, very fruitful and provide the best way to go forward. I tried. I have the outline. I haven't been able to stick with what we've been talking about and when, and apologize for that. And I saw this tweet yesterday, and someone just said that they hit 200,000 in dividends. And I don't know. So anyway, this is a money market fund. So this is not a dividend they're collecting. This is yield they're collecting, right? And right now, to get that type of yield in an account, and I think this is great. Someone is saying the key for investing is time and consistency. That's 100% correct. And let me be the reminder. People overestimate what they're able to achieve drastically in 2 years and underestimate what they could achieve in 10. If you commit to something and you have a well-defined, detailed plan, in 10 years, you are going to exceed your wildest dreams. I firmly believe that. Don't listen to doubters in the life. Listen to what you want for the future and go ahead and build that. So this yield is paying out currently $200,000 a year. Monthly, that's $16,000. And to do that, you have an account of like $4.6 million. Now that I don't know that that's very smart. Now, when you are dealing with something, this is a money market account, it's different. So this is dependent as long as the Federal Reserve has the yields up high, the rates up high. And it looks like right now we're looking for higher for longer. But we'll talk about that as we get into the macro section. If you had $4.6 million in a money market account, it might be smarter to take a portion of that, whether it was a quarter of that or 20% of that, and be executing off of CTM 2.0 strategies, because the return potentially would be a lot greater. And anyway, just throwing it out there and thoughts to think about for people. A lot of people look to execute different ways. Tesla currently taking another long position. Tesla on the year, 24% on the year is not bad. It's outperforming really crypto this year, holding another 2%. And again, Tesla here is a good solution looking for those looking to trade in the options market. I do believe that. You have to go ahead and discern what is best for you. Let's take a look at what's going on in CTM 2.0 as far as Bitcoin and crypto. And we look still Ethereum, Bitcoin on the sidelines. This is going on now about 3 weeks. And that is, my friends, a position of power waiting out this sideways price action. A lot of people in and out and getting hurt both ways. We continue to sit on the side and wait. When I said Tesla is basically outperforming crypto, I meant it. You have 21% return here on Ethereum in 2023, which is severely lacking compared to what is done historically. But look where we've been since February. We're right over here. We're going sideways now. Generally low volatility, and right now you're seeing Bitcoin and crypto at historically low volatility. That leads to big volatility, and you don't know when the next one comes. Let me revert back and show you what happened with TQQQ. Because when I say that you don't know when the next one's going to come, I mean that. TQQQ, and so this is on par with NVIDIA, by the way, right? It's the drawdown and return are basically very much the same. Interesting, and to a note, but for this year in 2023, you just go back a week ago, and this was break even, and now it's up 13% and holding a trade with an open gain of 9%. So assuming that's able to go ahead and take at least a 5% gain, this go ahead and begins to comment. And the importance of that is you're talking 29 trades, that's our win ratio, right? Across the board, whether you're looking at, Ethereum and looking at Ethereum, what it looks like over the past, 2 years, 2.5 years, right? Go back to 2021. 33% win rate, right? What happens if you go back further? What happens if you go back to 2017 and same win rate, right? Look at the return, look at the drawdown, but look at the win rate. This is what we do. And what that means over here is that if you're trading mechanical and systematic, and you're looking at a small sample here, 30 trades, and the win rate is less than 30%, you expect more than 7 out of every 10 trades. Look what this is like when price goes sideways. Staying break even, it was last week at 0%. Now all of a sudden starting to do and even out towards the mean of what its performance is historically. And it's beautiful to see. And the reason I bring that up is to help build your fortitude with what's happening right now in the cryptocurrency markets. Because really right now, during this current price action, right, to be where we are is fine. 20% on Ethereum. Now, you look at Bitcoin, and Bitcoin's been the leader this year, and it's not by much, right? 30%. And then if you have one third, one third, one third of your portfolio, Cardano's down on the year. So altogether, you're basically up only 10% on the year between Bitcoin, Ethereum, and Cardano, because Bitcoin's up 30%. And then you have, so divided by 10%. And then Ethereum and Cardano are canceling each other out. So, 10% on the year, it makes the case. And again, 2023, bringing in the solutions in the stock market, it just helps for, I believe, building the case for that portfolio diversification, because you don't know which is going to run when. And, all of a sudden you might see Bitcoin and crypto playing catch up. And obviously, well, not obviously, but it's my belief, even as you watch FNGU explode this year in 2023, and that's not off its historical performance. It's right on par with what it's done in the past, and continues to do. And when I talk about this being crypto-esque returns, if you add in the short side, and again, that has to be done through FNGD, not through, you could borrow shares. They would be expensive. I don't really know what that would look like, or what the interest payment on that would be, or anything like that. But just to show you, if you were adding in, and this is a rough estimate, but just to show you the compounding that takes place, and that would be on the short side with a return of basically and roughly, let me get rid of the long side to show you, 94%. But you could see what the compounding together does, right? And that's why we say it's crypto-esque returns. And if you look at what FD inverse has done, and if you go back and you go 70%, so it's close. It wouldn't be 9,000, but I don't know, 7,000. That's crypto-esque returns. Big shout out, Rick. Hope you're enjoying this beautiful, beautiful day. Keith, I have to blatantly disagree with you. I don't think any of us are ever going to retire, only because what a way, it's a passion. It's an absolute passion to be able to participate in the markets. And some people, it's going to be becoming making sure that their kids and grandkids and whatnot are set. And it's just also a way people are playing like Sudoku, or well, I'm not sure what they do, but to keep your mind mentally active into those later years. What a joy, but it's a lot nicer than doing it off of, the 5-minute time frame. That's for sure. So what else? We continue with crypto, and we see on the daily time frame, we are looking at Ethereum here, getting ready to exit its current open short position. Ethereum on the year is down 5%. Cardano on the year is down 17%. This is the daily time frame. And Bitcoin on the year, 34%. So again, and together, just barely profitable here now on the daily. If you're using a portfolio of one third, that's going to change. Now, I don't know when that would be. And why I say in yesterday's session, I talked about staying in a position of power until the next debasement phase continues. A lot of people right now are really changing their perspectives. There are some people seeing the roaring of the stock market, and they're looking right now and they're saying, well, it looks like we're going to be hitting new all-time highs. This is a little bit of macro at the same time, so I'll highlight them both. Right now we could see price by August hitting new all-time highs, and my response to that is, well, and I remember doing some spaces over here, and I remember how bearish everyone was. I really remember how bearish everyone was. And now I've seen a lot of people flip, and there's nothing wrong with that if we're going to new all-time highs. And I don't think why there's any urgency that would have to happen by August. If it happens this year for the equity markets as the Fed eventually moves towards a pause. If you would have asked people a week ago or 2 weeks, it was almost consensus that the Fed was pausing in June. And now we are looking at some drastically different expectations. In June, we are looking at now a 68% chance that the Fed is going to go ahead and raise rates. Now, we do have another CPI reading, but we saw today that the Fed's favorite inflation indicator reaccelerated. So, and that is why you're seeing expectations continue to raise, as well as the stock market continuing to roar upwards, is probably giving the Jay Powell and everyone else the idea that, you know what, we could just keep doing what we were doing. The market thus far is able to take it. And likely that's, by the way, in July, they're also now pricing in a 28% chance of another 25 basis point hike. Now, this is all dependent, obviously, on truly a debt ceiling deal being reached and going through. And it is possible, like right now, the whole belief is that it's in place now, and that it's probably be voted on by Tuesday. But that's not done yet, and it has not been voted on, and it has not been extended, and you never know what's going to happen. I mean, it is possible that coming into the June 14th meeting, that even still there was no agreement. And if that were to happen, I don't think the Fed would be raising rates. So it's the markets, anything could happen. But right now, as of today, this is what is being priced in, and the markets thus far continue to be able to respond well and take it. Let's take a look across markets, and then we'll come back and we'll go like that. Oh, while we're talking about macro, though, let me go ahead and add. And this chart over here is showing M2 money supply, because we've looked at the charts of it coming off like drastically. This is inflation adjusted M2 chart. And I find this chart very, very interesting, because in the back of my head, as I have throughout 2023, right? Was it February, late February or March, where I said, no, it was March. It was the day before. Well, no, it wasn't. It was in March, though, when I said, well, it's looking more and more likely that actually we not forget the soft landing expectations, that we could have a hard landing. And I'm worried what happens coming into the fall of 2023. And the reason I was worried about the fall was because that right now in 2023, we've seen looser monetary conditions. And it was because of the extraordinary measures of the U.S. Treasury counteracting quantitative tightening. But that's now coming to an end. And that was the concern, is when that comes to an end, conditions will go tighter. And some people call it, Lynn calls it the double whammy tightening. And it is a concern of mine, which is why, look, I'm not, the markets could make new all-time highs when you go back and you look at what happened in the last tightening cycle. And once they stopped hiking rates, quantitative tightening is still running, and markets were able to make new all-time highs. Now, markets are still tightening. So this is when the markets stopped the raising rates. Markets went to new all-time highs. This is when they just started lowering the degree of rate hikes, and also that inflationary pressure started rolling over, and markets here are coming off the bottom. But I don't see the rush or the urgency for them to make new all-time highs, like trying to put a deadline on it by the summer. I mean, it wouldn't be unusual as they move towards the pause to see a further condition, but I'm not sold on that. I'm not sold on that at all, and it's because of. And again, don't forget. I know, Michelle, people were bearish a couple of days ago. You were pointing out, but most were bearish in this area when we did the inverse. What happens if the purple line breaks? And people were really bearish in that area, and we were following the liquidity. And now we have to be like, markets are forward thinking. We're forward thinking. The financial conditions are about to get tighter. And I think you're seeing the dollar responding, right? We've watched the breakout of the descending wedge of the dollar. We're seeing the 10-year continue to rise. I mean, my expectation was that it was going to stop at the top of this channel, but I thought that it was possible to reach up there. But now we could have a breakout as they're talking about further rate hikes. And look, it's that uncertain. That would be crazy if that happened. I would be surprised, right? But if that happened, that to me looks like, what does that look like to you? We're in an uptrend, and now we have this bull flag developing. Michelle pointed out what a bull flag looks like just a couple of weeks ago in this area over here, and look at price's reaction out of it. And what's up, Jamie? I hope you're having a wonderful, wonderful weekend. That's a just good distinction. Retiring from the corporate job. There, we like that. Austin, same here, man. I love being here with all of you, and I'm really grateful for it. And since Austin, your name is Austin, I want to talk about this with y'all. And this is Austin Herbert, Open Source Fitness. And I don't know. I've been following Austin for a while. I don't know. I don't even know how long, but for a long time. And I think Austin used to be with Bitcoin Magazine. And Austin has been really just tweeting a lot about fitness lately. And a few weeks ago, I was inspired to start doing 10,000 steps a day. He's really adamant that, listen, if you are going to be working out in the gym, whatever you're going to be doing, regardless, the first thing you need to be doing is 10,000 steps a day. Now it's roughly 5 miles or 7.5 kilometers. And I have to say, I mean, I've done it now for at least 5 out of 7 days a week for you weeks. And I feel fantastic. I also do the intermittent fasting. He also suggests that you should also be doing I don't know exactly where he has the layout for his getting started, but let me tell you, the first thing you need to be doing for anything else is 10,000 steps, and then intermittent fasting, which for most of you is eating anything you want. He gets into the less ingredients, the better, but in an 8-hour window. And I've done that for a long time. I have my coffee in the morning, and then usually later in the afternoon, I'll begin eating or whatever. But putting the two together, I just want to point out that I highly, highly, highly recommend it. I have more energy throughout the day when I'm putting the kids to bed at night. I have so much more energy. It's ridiculous. So that is very important if you want to perform at an elite level, to be in really, really good shape. So thank you for allowing me to share that with you, and getting off tangent here for a second. But I do think it's very, very important. All right. Jumping back in over here and just trying to figure out what we're talking. Oh, this chart over here. This is what I have in my back of my head, though, about wait a second. Because remember when Powell said that they flooded the system with liquidity? And I've always wondered if there's ample liquidity out there. I've talked about the massive amount of money being held, right, on the sidelines, the $2.2 trillion of excessive liquidity held overnight. And if, I saw at the Bitcoin conference that, what's his name? Pulsar, the guy who in 2008 explained to the Federal Reserve what the shadow banking system was. And he was talking about, listen, if something were to happen, and he pointed out this exact situation here, there's $2.2 trillion sitting on the sidelines ready to backstop the system. And have we just been seeing a reversion to the mean? I mean, are the markets able to withstand further tightening? And it's really hard to time these things. When I say that I get concerned around the fall, and that's truly the case, but I mean, the Fed is tightening. It's going to have lagging consequences. There's no question about that. I've seen it from family and friends. I continue to see it, and actually it's getting worse. And I imagine that is going to continue, maybe not just into the fall, but further out into 2024. I don't know. This chart is really striking to me because this is the chart that kind of goes against my own current formation of beliefs, and it does suggest potentially that there may be a further little room to go. Ooh, I need to get better about doing the longer term fastings, but I feel good about starting slow. I feel really great about doing the 10,000 steps. I have to get into it. I saw a program. I'm ashamed to say it, but it was on Disney, and it was with the guy that plays Thor. And in one of the episodes, he talks about fasting. They do a 36-hour fast, but they talk about what happens with the body. It's really beautiful. I'm glad you're here too. Thanks for being. If you're here though, and you know what, could you hit the like button? I understand that it really helps the channel, and would appreciate your support. Just if you have a moment, you haven't already hit the like button, please do that. And if you're new here, welcome. If you're not, welcome back. Let's talk a little bit about what's going on in Bitcoin. Before I do, I want to go over the market review. We see the NASDAQ, and we talked about its breaking out of that descending wedge to the upside. And I am going against the grain over here, and I am saying, well, why that might continue to burst up higher, that usually sets off some type of near-term correction. So I don't know. I don't know how to define near-term. Maybe next week we'll go back and we'll look at other, like you could see it breaking up, comes back for a little correction, breaks up, comes back for a little correction, break up, here comes back for a little correction, right? So none of those were trend reversals, but those were all not so little corrections. It's a 15% correction. It's a 11% correction and an 8% correction. I mean, those are still corrections on the equity markets. And again, even if we were to correct, as long as we held this line over here, the sell impulse line, that's all extraordinarily healthy. And I know we've already came back and we've retested this last line of breakout over here, and we're able to hold it and resumed off, but it's not unusual to come back and test it again. So, and if we break the sell impulse, that sets off, right? A sell impulse, but then you got resistance to breakthrough now. On the S&P 500, you saw what it was like when we had that purple line, that caution. Price just continued consolidating. S&P, it looks like that it is on the verge of breaking out over here. It would be a massive bullish breakout, in my opinion, to be rejected so hard and then come back above it. We're watching. High Street coin. Ask me, check that out inside the Discord. And I am going away with my bride over the weekend, but I will tag me, and I will get to it and take a look. Yeah, it's 45 minutes to an hour for the 10K steps, and it's interesting on different days. I find significant difference in how long it takes me. I'm doing stuff though. Often I am praying. I'm also following the markets, and depending on what's going on, and even if I stretch beforehand, but an hour is a good amount of time to go out there and start feeling really good. I mean, it just pays dividends throughout the rest of the day. It's ridiculous, and feeling good is not overrated. Feeling good is a really good thing. You want to be the best you and live your best life. There's no question about that. What else? Let's talk a little Bitcoin over here. Let's take a look at what's going on with the Bitcoin, and we'll do that as far as in our market review. And we could see, and by the way, you remember the tweet April 10th? One of these is likely wrong, and that was sentiment was massively bullish at this point. We've come into a pullback. That pullback thus far has been, roughly 15%. And now people, I think, are wondering whether or not we are getting ready to resume out of it. If we do, if we are able to hold this broken resistance that I'm highlighting now, and we're able to come ahead and test this area and hold and resume off over here, that is so healthy. Then we are looking really good. And I'm going to be really, really happy and excited. And may even, I know that we got resistance in this area that we talked about yesterday between 3,000 and 400. But then we could talk about things like, all right, breaking that resistance I just showed you, that sets up even maybe even a test at 50K, 0.786 retracement fib before the fib. I'd be really, really excited about that. But we're not there yet. We still got some work to do. You can see it very clearly from here, right? And this line is so important. This is when I get to talk about some discretionary stuff with you next. I'm glad I just was able to it's a good thing that I have the little subtitles below. Nice, John. I'm glad you're here. Really glad you're here. Let me just show you this little line over here, right? You're familiar with it yesterday as the red line. We still have to break above there to even be looking at a retest of the green line. If I go ahead and I bring that line down like I did yesterday, you can see thus far this morning, this is where we're topping into and finding resistance. So it's a good sign that we've held the bottom area, this green line over here that we bought down, because we have not yet had that we've not had the lower low resumption, right? Now, someone could say that, well, we didn't take out the low here. We tested it, we came close to, but I would look at this on a daily time frame and say we have not closed below that line. Therefore, holding on this bearish structure forming by a thread. Yeah, but holding on. And if we're able to break outside this light trend line I have over here, that likely brings up a test of this line that I'm highlighting now. That's the red line that we've been looking at from a discretionary standpoint. I think it's over here. I don't even know where it is today. I don't have it pulled up. But if you're familiar, if you're putting the work in each and every day, and that's where we take a stop loss from the last entry that took place. If price were to get above there, that would be a tiny loss in this case, right? And if that happens, if we break out above there, then there's a good chance that we are coming and we're going to be testing this confluence, right? This green line, which is a bit of a stronger support, right? So when it broke, that was touched as resistance once. That's an area. And then we have the downward sloping line above there. So we're not out of the woods. We're looking for that really resumption up until we're able to clear above all that resistance above us. It's possible we're still in pullback. And I noticed that, well, a lot more money and seems to be flowing into tech, right? Seems to be flowing into the stock market. And even so much as this, I want to say this glad tidings of a debt deal being reached, the action that we're seeing here on crypto is not really as good as green as it is as we're seeing across Nasdaq. And I mean, that could change, but that's what's happening right now. I'm glad you're here as well. I mean, we're just here putting the work in. That's all we do. We just put the work in each and every day, and it's a beautiful thing. Well, Keith is asking, why is it better to look at a linear than a log? And I'll be the first to tell you that I look at, let me just pull this up. Oh, then we get into the discretionary. All right. So I'm excited for that. So look, I'm the first to say, like, look, I look at discretionary. I look at a linear chart going back 20 years. And I know no one else will do this, or they just don't, or frown upon it. But ever since 2008, when the Fed began this QE experiment, the US dollar has been respecting these linear trend lines. And it's actually where we peaked out into this line. And that's when everyone was telling you 120 is like, there's nothing in the way. We were like, well, yeah, we've got resistance in the way. We were there ahead of time. And we could look at that in a second, Dave, Steve, for sure. That fits in nicely. And I think that you could look at these linear lines these trend lines on a linear chart in a long time. I think you could do that. I look at both though, and I continue to look at both from multiple angles and aspects, and I think it's better I think it's better to consult multiple views and analysis, like especially if it differs from your own opinion. Are you afraid to consult views that are different than your own? I want to know. This is why this one is so striking to me. This, like, is this really the whole, this is in the back. I've never had it visualized before, but in the back of my head, I wonder. So let's look at gold and silver, and let's see what's going on. I have no idea what sketches I have over here, so this is probably not the best sketch, but I will continue over here. And what I'm going to do is put a trend line right here. Right. Look at that. We're very close to breaking down on gold. We've talked about this trend line when we've looked at the cup and handle forming and when we would see that sell impulse taking place. And good timing, Steve. We're right into it. If we break down, that is a sell impulse occurring here on gold. And likely what's happening right now, in my opinion, is because of the miss expectations of the Feds, moving towards that pause. And actually it's looking like, well, June's live, July's on the table. Um, Gold is probably under pressure because of those rates. I'm a little curious why Bitcoin is not under further pressure. I am, because it was you remember when I showed you the treasuries with the yields, the real yields, and that's when I said one of these is likely wrong. And since then yields have been rising and Bitcoin has corrected, but not too much. So, but gold, I think, is feeling this, and maybe we get the sell impulse. If we get the sell impulse, but I mean, you could also get no deal done on the debt ceiling, and this thing would rocket up over the weekend when it opens up for trading again Monday night. There's no question about that. Yeah. So I love Raul's thesis when he talks about, my thesis that Bitcoin is a hedge above all against the debasement of the dollar. And the dollar is going to continue to be debased. I truly believe that. And that's all dependent on continued and further adoption. If one of the, so that's like the second most important part of the thesis, is that adoption continues. And Raul's looking further out, and he also sees that debasement. He's looking at, roughly 15 months from now to see a further expansion, massive expansion of that balance sheet. And it's, different nuances, and they're all, tied together. I do believe, at the end of the day, I believe in the long-term view, it's one and the same. And that's, I mean, it's a good long-term thesis. That is a good long-term thesis. It's what happens in between, though, that you gotta get right. So, what else? That's something to watch out for, right? This support could hold, and you could see horizontal as well. It's coming into an area, but if that purple line closes below, that's a sell impulse, and likely we see a further retrace on gold. If that happens, we're still looking for, at some point in time, for the Fed to actually move towards eventually pausing rate hikes. And once that pause is in and we're seeing the economy slow down, that should really be when gold shines. So let's continue to watch it. I'm glad you brought that up today. Silver, I don't really know what to say over here on silver. I wish I had my other charts pulled up that we've been following for gold and silver. So I'm just going to leave it on gold for right now. Silver seems to have some room over here. You could even see this really big, I want to say, area of support right in this area. So silver is not looking so bad here at all. It's looking a little bit healthier for whatever reason than gold. So that's I'm obviously surprised by that. All right. So discretionary trading, at least me not forget. We were talking about earlier in the week, and I'm going to just bring this up and show you. Let me go ahead and mark this over here. Right. And good. Discretionary. And we were showing, I want to build off of this. We were showing, this is like zoomed out, and I'll show you it on a chart right now. We were showing on a 15-minute time frame. Okay. Just the, and by the way, it's much easier to instruct on a smaller time frame because this is the same type of patterns that occur on the larger time frames. It's just that it plays out a lot quicker on the 15-minute time frame. And the 15-minute time frame is not something I recommend to trade at all, in so much as that, I mean, how could you be present to trade an asset that trades 24 hours a day, 7 days a week on the 15-minute time frame? You can't. Consistency is important. And so unless you're just trading a certain portion of the day, public markets, there are some people who trade, for example, between something like Eastern time, 8:30 a.m. up until 10 p.m., first 90 minutes of the day. And if you're doing that and you're trading off a small time frame, it's possible, but blah, 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 blah. And then I'll make the distinction before we go any further. I don't think that you should be trading such setups. This is not to Yamato. This is to all of you, right? Paper trade them. This type of entry is considered experts only. It's called a double black diamond to show the degree of difficulty. It offers a high risk to reward, but also a low probability. Let's take a look at that in real time and then what happened. So let me zoom in to you. Let me zoom in until the 15-minute time frame. Yes, if it was automated, it would be possible, but it is discretionary. So there's that one nuance. So let me start right over here. And this is where we were with this trend line over here and price breaking out above it. The only other thing on the chart that you were just looking at that's different, right? You were looking at this one trend line, the trend line below, and this trend line over here, which would be considered a conservative entry. All right, those are and then you have the boulder line back over here. So, and you're going to see that this line is added, which I'm going to erase to make this easier because I'm going to show you in 1 second. And then this other underneath trend line, I'm going to leave that there for 1 second. So you're looking at price right here, right now. And we're saying, well, that's a double black diamond entry. Now you could see this area of support you're also coming off of. And the trend is down over here, but the trend is we're in an uptrend. Over the last few months, Ethereum has obviously been making some pretty spectacular gains and just in a pullback right now, right? So in this area of support, if you have a double black diamond entry, is it something to take? Hold on 1 second. This is where we are. So let me remove lines just to make the chart clearer for all of you. So you take this trade and it's pointed out, look, this is a very low probability. And then you see that price continues to go and takes out the stop loss, right? Now, the stop loss used to be the low of the wick. I think that this is discretionary. This is very important, that likely the trend line break below is better. And also, I don't mean to confuse you right now, but I'm going to, because I want to get my thoughts out there, as in the months and years ahead, they will be further developed with you, that I do believe that a good hedge on this trade, I know I mentioned this before to you, is on that trend line break, taking a trade in the opposite direction and looking for that small take profit, roughly the distance that you were trading, right? So let's say you're risking 1% over here and on this entry, and your stop loss is down over here. And then the same thing on the entry, you're risking another percent, which is the 1% take profit. It's almost like a bit of a hedge. All right. So that trade is stopped out. This trade entry is over here and then you're stopped out over here. Look what happens though on the daily time frame as price came below, right? Price never closed below that area of support. Let me come back straight to the 15-minute and then show you what happens next. After being stopped out over here, you then take this trend line and you go ahead and you move it over to here, right? You're moving it off the top of wherever that move was. And then you could see the next entry occurs right over here. 15-minute time frame makes it very difficult to, this is how many hours later? Roughly 2 hours later, right? And you have to stick with it every 15 minutes. The same type of behavior occurs on the daily time frame, the 8-hour time frame, the 4-hour time frame. It's much easier to trade and manage. But here's your second entry. Stop loss, same thing, is off the low over here, the low of the trend line. So here's your entry. Your stop loss would have to be down around here, around 1780. Extend the trend line out further, right? And as the trade continues to develop, that is also where you exit the trade. So you can see that trade continues to stay into profit. You have over here the line we looked at from the beginning. That's a conservative line of entry. That is either add to the position, right? Take profit or a piece of profit off of this one into the area of resistance. And then on the breakout, you could add to the position. That trade is currently still in play. There's the trend line. Yamato, I hope that is helpful for just branching out and explaining further off of the first entry, how the rest of that develops. Anyway, it's very important for me to we spent so much time, rightfully so, our main focus completely all on our mechanical trading. The results speak for themselves, and it's why. At the same time, I want to continue to develop and almost make a hybrid of discretionary trading, do discretionary trading that is rule based, and continue to work out further in developing that. And that is just the beginning taste of it. But that's it for today. As we leave here today, I just want to wish you all a wonderful, wonderful weekend. Thanks for being here. Thanks for putting the work in. And we'll just continue growing, right? Continue working, continue growing. That's what we're here to do. I wish you all have a wonderful, wonderful weekend. Tesla, you're trying to point out. Let me pull up a chart over here and see what's going on. All right. All right. Tesla pushing. Everyone, have a beautiful day. Sincerely, thank you for being here. Have a great weekend. Monday in the US is Memorial Day, but I'm pretty sure the CTM we have to, no matter what, we have a session, only because even if it's private, because I have to get out to you the CTM summit, and then we have to go over the fruits of a lot of what is being worked on, and as a community as a whole, put together that collective hive mind and continue pushing our collective effort to continue to make advances and gains. So that's what we will be doing. Ace, have an incredible weekend. Conrad, everyone, right? Memorial Day on Monday. Those of you who have served, thank you from the bottom of my heart. God bless you. I love you all. I mean, I don't think we could label it CTM 3.0 in sincerity, only because what 2.0 is 2.0 is just straight mechanical, and there's nothing like it. And it's often said that, that you can't out trade it. And that's likely true over a long period of time, but it doesn't mean that we can't improve upon it, as you've seen or you will see from even the CTM 2.0 summit meetup. But yeah, wherever those gains come from. At the same time, also it's that intellectual exercise that makes you sharper, and it's going to bring fruits one way or another. Anyway, everyone. Yeah, thanks, man. Have a beautiful, beautiful day. I'll see you all on Monday. Have a good one.